About 2 minutes away from the end of the trading day, Katie Greifeld and David Gura, and here to help take us through the closing bell, we have a global simulcast, joined now by Isabelle Lee. She's in for Carol Masser and Tim Stenovec. We welcome in all of our different audiences across all the various platforms right now. And Tim, I mean, you take a look at the S&P 500. We're not going to finish quite at session lows, but pretty dang close, and boy, it was ugly out there today.
Yeah, just across assets, really ugly. I mean, I don't even know which superlatives to use. The NASDAQ 100 closing, or ideas it will close in correction territory. The S&P 500 right now, trading at its lowest level going back to August 21st of 2025. Oh. So giving up all of the gains over the last few months, going back to this summer, Isabelle.
What's interesting to me beyond these market moves are the notes that we're getting. We have Goldman Sachs trading desk saying that investors should not turn bearish on U.S. stocks. They're saying that current positioning leaves the market vulnerable to a short squeeze if, geopolitical tensions ease. So that's really an interesting take from Goldman.
Having a fascinating conversation here on the TV side just a few minutes ago with Amos Hochstein, talking about how the market is pricing in risk but not disruption. He telling us that we are actually in the middle of disruption and that those who've lived through this before are no longer trading, no longer active on Wall Street. But he very much making the point that this is a unique moment, a novel one, and one that's likely to have broader market implications, Katie, going forward.
Yeah, definitely a big note of warning there. You think we've seen volatility in oil so far. If we do tip into pricing in disruption, as Amos told us we might be headed for, then certainly it'll be interesting to see the different cross-asset implications there. But we do hear the bells ringing on this Friday, the end of a trading week, and an ugly one at that. The S&P 500 down about 1.7%. That is going to cap off a fifth straight week of losses. That is the longest weekly losing streak since 2022. The NASDAQ down about 2.2%. I am loath to mention the Dow, but also finishing about 1.7% lower. That is going to help it enter into correction territory. The NASDAQ 100 there as well. And the small caps not escaping the selling either, down about 1.8%, Tim.
A relatively broad-based decline. If you look at the S&P 500, almost, David, 4 stocks lower for every 1 stock that is higher. 110 stocks did advance in the S&P today. 391 stocks moved lower, though. I
look at the IMAC function on the Bloomberg terminal, see what's in green, what's in red. Energy, obviously the one that's shining greenest, the most verdant there on my screen. Energy up 1.87%, as we've been talking about on both radio and television over the course of the day in these last few weeks. Oil prices really animating all of this, and that concern about how high they can go, and of course what that duration variable is going to be.
All right, well, there's a little bit of green in the S&P 500. I went to that part of the IMAP function and found some gainers today. The biggest gainer on a percentage basis in the S&P 500 is Entergy today, up more than 6.8%. This is a result of a deal with Meta Platforms. It's paying for the construction of 7 new natural gas-fired plants to fuel its data center in rural Louisiana. Meta reaching a new agreement with Entergy to build and pay for enough gas plants to provide a total of 5.2 gigawatts of electricity for the data center. The agreement includes a Meta commitment to help fund up to 2.5 gigawatts of new renewable resources, as well as a memorandum of understanding to explore future development and use of nuclear power. Entergy up by 6.8%, the best performer on a percentage basis in the S&P 500. Among the best performers in there as well, I think it was actually the second best performer. That's right. Brown-Forman up again on news of a potential acquisition by Bernard Richaud. So look at that. Brown-Forman, controlled by the Brown family, up 5.6% today. It was up yesterday as a result of this as well. The big question is the family going to approve, because they do have voting power of shares? And finally, Peloton. A blast from the past.
Yes, indeed.
Out there.
Speaking of 2022.
I was on my Peloton this morning. What are you talking about?
Katie has an impressive Peloton streak.
Okay.
Yeah, it's quite the setup.
All right. Well, I don't know how to segue that into what the stock did today, but it's up 8.9%. This is actually the result of Eric Jackson out there on social media. It surged as much as 17% before giving back some of those gains, surging the most intraday going back to July. Eric Jackson, the activist investor, said he is long the stock. Here's what he said, quote, "I'm long Peloton at $4, he said in a post on X. Peloton shares at that point were down about 24% year to date. Up right now, though, or up today to $4.43 a share.
Wow. now?
So for decliners, I was very spoiled. I had a lot to choose from. We can start with Amazon. It's down by 4%. No specific news, but we do have the European Commission saying it was hit by a cyber attack that may have resulted in the theft of internal data. And the attack struck the Commission's Amazon Web Services, or AWS, account, so before being detected. So maybe that had something to do in part with the stock's decline. Up next is Coinbase. I wanted to talk about this because I wrote about this story yesterday about how Coinbase is teaming up with Better to really offer crypto mortgage. Tim will be interested in this too. Crypto mortgage to Americans. And now we have TD Cowen saying that the product is mixed, so that's not really that great. The advantage for the borrower is that they can obtain credit against Bitcoin holdings, TD Cowen said, but it's still questionable how they will move forward with that. So we have Coinbase down by more than 7%. And lastly, we have cybersecurity stocks down, but I want to zero in on the ticker PANW. That's Palo Alto. Shares are in the red by 6%. It's joined by its peers CrowdStrike and Sailor, dropped by almost double digits. So it's really because of a Fortune report about an artificial intelligence model being tested, may be used by hackers.
All right, let's take a quick look at the bond market there, because also spoiled for choice, though you did see an interesting steepening, which we were talking about with Jim Caron. You can see the 2-year yields actually fell 8 basis points, a little bit of a rally in the short end of the curve, which was certainly interesting when you think about where we were after that ugly auction earlier in the week. Can't say the same for the rest of the curve, though. You saw a little bit of selling pressure deeper as you get further out the curve. 30-year yields higher by about 4 basis points. 10-year yields, we are back above 440. Tim, are you scared?
I wouldn't say I'm scared.
Okay.
But what I will say is I wonder what the president's next move is, because yesterday after the sell-off, what we saw was a message from the president calling for an extension, and by many accounts, perhaps a third sort of extension. And the idea was that maybe this would give more time for negotiations, and markets bought it a little bit. But then this morning, with a seemingly increase in hostilities overnight and more strikes and strikes on infrastructure as well, markets are not buying the idea that there is a sort of an off-ramp anytime soon. I mean, look no further than oil prices. You have Brent right now up above $113 a barrel, WTI hitting $100 a barrel. That's up close to 6% right now, and Brent up, Isabelle, almost 5% today.
It's really been wild in the oil market, but I'm wondering if we're a victim of our own quant system, algo system, or just our own fear. Citi released a note this week saying that selling off on Friday and buying back on Monday has been a recurring pattern over the past few weeks, because investors are just really wary of carrying risk over the weekend, because maybe they want to have a nice brunch session or hang out with their kids, but they buy the dip.
Bloomberg
Thank you so much, Katie. I appreciate that.
So
yes.
I feel like that's really maybe something we're seeing. Citi also said conviction has been low because, of course, it's a headline-driven market, and it's really been tough to figure out this narrative.
Now, picking up on that, I wonder how inured we're getting to this, the way that all of this has unfolded. And Tim, I think your point is a very good one. What does the president say we're due next? We have this very specific 10-day extension ending at 8 p.m. East Coast time, which I think is 3:30 a.m. Tehran time on April the 6th. I just wonder sort of what power he has in this moment. I think that's what's been laid bare today, as we've seen Israel make those strikes on infrastructure in Iran today. I think the president feels like he's still calling the shots and running the show and determining how long this is going to last. But I will say, from what I've watched over the last few weeks, he seems to have limited power in that regard there, especially as this war widens, Katie.
And I'm sure you're going to be discussing something along these lines at 7 a.m. tomorrow and on Sunday. But it is interesting. I mean, you think about the potential end games for Israel. You think about the potential end game for the U.S. How much of a gulf is there between them? That certainly is a big question as this Iran war continues to deepen in terms of the time frame. It's going to be interesting to see how all of this plays out in the market. I keep going back to this note from J.P. Morgan, basically saying that should oil trade at $110 per barrel for the rest of the year, that earnings estimates for S&P 500 companies would be shed by as much as about 5%. And that really is one of the last sort of rallying cries of the bulls out there, that corporate America still looks pretty good right now, Tim.
So that could be the view on what happens to earnings, but there's also a big political element to this. We had a great conversation with Joel Lovinger out of our Texas bureau earlier. He, along with Jeff Mason out of DC, went to CPAC over the weekend, and what they heard from people was a real difference in sort of their support for the president because of this war. But it reminds us that affordability is what this president ran on. And if oil stays high and affordability, things don't become more affordable for Americans, I think, Republicans really could pay the price at the polls come November. But before that is Bloomberg This Weekend. 7 a.m. tomorrow.
Thank you so much.
David Gura will be there along with Christina Ruffini.
And hopefully watching.
Yeah.
The comfort of the Peloton setup, whatever.
I will definitely be watching. I'll definitely
Hop on your Peloton, put on
in.
Bloomberg This Weekend. It sounds like a great Saturday.
It does. It is going to be a great Saturday.